All right, so first question is from George. If I work a dividend investment strategy, what percent of my investment could I expect to return in monies each year? 5, 6, 8%? I guess, or 7. I would like to retire next year and would like to use this money to live on. I'm receiving a non-qualified deferred compensation package over $2 million in August and trying to work with this issue.
He's trying to work. What do you think you should get? What's a livable percentage rate of return?
You're the professional.
So again, it depends on his spending need, obviously. But I think the question here is that he's gonna have a big lump sum of money. Here's what investors need to remember when it comes to yield or income versus overall growth. As investors, we're all in the same game that we want our money to grow. Mm-hmm. So the total return equation is really simple. Total return equals growth, appreciation, right? Mm-hmm. Stock goes from 10 to 12, 15, 20, and then income. So it's growth plus income. It's we can't really control growth because then to some extent it's at the mercy of whatever the market is doing at the time, in large part. We can control income though. You can control dividends and interest and distributions because that's a very steady number. If a company pays a dividend of 30 cents a quarter or $1.20 a year, it typically will do that for a very long time. And most companies will try to slowly increase that dividend over time. In fact, some companies have paid dividends without interruption for over 100 years. Wow. So you can get a lot of predictability out of the income side. In what I think what he's asking here is a total return question. Mm-hmm. Can I get a 5, 6, 7% total return? And the answer is certainly. You can get the markets, the S&P 500 is averaged really close to 10% a year per annum over time. Wow. It doesn't feel that way. But that's been the average rate of return over, call it close to 100 years. But 43% of that return, Brian, comes from the dividends. Mm-hmm. So I'm a big believer in having at least the predictable side taken care of, dividends, interest, distributions, and that piece you can count on. And ideally, if you're in retirement and you can live on just that piece of it and allow for fluctuation on the growth side, so over time you get growth, then that's really, I think, the way to look at it. So let's say today you get 3 to 4% just in income, and that's enough to live on. That's great because you should get another 3 to 4% or more on growth. So your total return is in the high single digits.
Okay.
Cool.
All right.